This, we can move to our next speaker. It's Leon from Babelfish. This is a new project coming into the RSK ecosystem focused on stablecoins, and with a big day and a governance token being launched. So, Leon, go ahead. The stage is yours.
Thank you, Gabriel. Pleasure to be here. And yeah, also, Paul, thank you for your presentation just now. Big fan of Edge since the early days. Awesome. So yeah, so today I'm here speaking on behalf of Babelfish. Babelfish is a project that launched in the first week of June, the alpha product, which is called XUSD. And XUSD is an aggregator of stablecoins with the main objective, the primary objective in the short term, is to bring over the 100 billion plus of stablecoin liquidity that exists in chains outside of Rootstock and port them over to Rootstock through our meta stablecoin XUSD. So what are stablecoins? If you're listening to this conversation, you're pretty familiar with what stablecoins are. You know, it's just a way to track the value of a dollar, and the way that you can do this is whether you know, either you have a centralized model with a bank in the mid space, you know, with $1-to-1 to stablecoins, or you can collateralize it with a digital asset like Ethereum, in which case it's not so capital efficient just because of the extra percentage of collateral you need in case of high price variations. And then there's also some very cool models that we have not seen a lot, which are the algorithmic stablecoins, which is basically, you know, a way to create your own central bank in a way, where you incentivize users to, you know, to sell the collateral or buy according to demand and supply. And so there's a lot of things that have been happening around stablecoins. Next. You know, we're calling the dollar the currency of crypto, which, you know, for an RSK ecosystem update, I think it's relevant. So there's only one person once said, I remember this perfectly, you know, like there is only Bitcoin is the only cryptocurrency in the space, and everything else are digital assets, right? But then you have stablecoins. So then the only currencies that you have in the space that we're in, it's Bitcoin and stablecoins. So no matter where you go, whether you're in decentralized finance or in centralized finance, most of the prices have the base currency, they're quoted in dollars. If you ask people whether they're in Argentina or if they're in Japan or they're in Germany, how much is one Bitcoin, they're likely to tell you it's 48K. They're not going to give you prices in pesos or in euros. You know, initially, stablecoins were created just for traders because that was the initial use case of Bitcoin as well. It was just speculation, buying and selling. And so traders needed a simple way to park their gains overnight and, you know, not worry that they would wake up the next day and maybe, you know, lost whatever they had made. And it's just an easier way to, you know, to manage your P&L. And so, you know, if you look at the velocity of stablecoins, which is, you know, it can be calculated simply by dividing, you know, the volume over the market cap. You know, stablecoins have the largest volume in the ecosystem. Tether, which is the largest stablecoin today, and has been always, has the largest volume. It's a coin with the largest volume in the space, and so is USDC, and so are BUSD. So there is a lot of transactions happening with stablecoins, and it's basically the foundation for this whole economy that we're building. Next. So yeah, so, you know, originally the stablecoins were not really something that was hot. Obviously, we're here for you know, to abandon the dollar. The ultimate goal that we have, or the vision that many of us have, especially in the Rootstock ecosystem, is hyper Bitcoinization. You know, like it's sometimes it's a bit of you know, disconnect to, you know, to be working on the Bitcoin space, but then also feeling like you're doing Uncle Sam's bidding by promoting the use of the dollar. But we see it differently. We believe that, you know, dollars are the trusted network, that we are hacking into a trustless network. And so, this is a great opportunity to innovate around stablecoins, to onboard users with currencies that they're familiar with, and the dollar being the biggest network of a familiar currency out there. It makes sense that it's become the currency of crypto. But there is a big problem, right? There are problems of centralization in our space. Beginning with the banks, most of the CFI services, centralized finance services out there, like BlockFi or Celsius, Galaxy, they're all relying on a handful of banks. So these are, a few points of failure that have been identified. And then even if you're a purely DeFi service and you do not have a bank account, most likely you're highly reliable on centralized stablecoins. So if you look at those charts over here, you can see that clearly the biggest winners are USDT, USDC, and BUSD. Then you have DAI. DAI from MakerDAO, it's a great example to follow of how we can create a dollar-pegged stablecoin that is backed by cryptocurrency and with a functioning DAO. But even DAI has its own problems because over 50% of the collateral in DAI today relies on USDC. So we're running with it, and we are seeing the space evolve very quickly. Stablecoin supply or float outstanding, as you can see, has grown massively just over the past year. Whereas in 2018, 3 years ago, it was under 5 billion. So we're seeing a massive 20x growth here, and we don't expect this to slow down. We're actually expecting to reach $1 trillion in stablecoin float outstanding within the coming 12 months. Next. Next slide, please. Yeah. So so there's plenty of risks in the stablecoin space. Stablecoins, or it's really a misnomer, right? It's just really coins that are stabilized around a currency. That's the long form of saying what stablecoins do. But there are a lot of risks. There is a big appetite for stablecoins to facilitate trading, clearly, and that's why we're seeing high rates for lending your stablecoins. That means there's a high demand, to go long Bitcoin. But there's big risks. There's nobody likes to talk about potentially the major stablecoin not being backed 100%. Or perhaps having the New York district attorney confiscating part of it. What would happen then? It's a big risk that would really affect this space if something like that were to happen. Then you have also redeemability risks, right? There's been cases in the past, for example, Huobi, the exchange, they had the Huobi USD, which was sort of like an aggregated meta stablecoin, and there was a moment when they needed to redeem Gemini USD, and they couldn't. And they lost some funds in there because the Gemini USD had lost its peg. So we've seen examples of that. We're also seeing a lot of incoming regulatory risks. Governments seem to be really preparing to roll out CBDCs, and we are not sure yet how that will happen. Will it be in collaborations with the banks, sort of like a retail CBDC, or will it be like a whole CBDC where banks may not be as important, or will it be partnerships with stablecoins that are following all the guidelines like USDC? That is yet to see. But again, these are risks that we're perceiving in the industry. Then you have also governance risks. So for example, DAI is doing a very good job right now, but algorithmic stablecoins, which are highly reliant on a very functional and quick DAO, we're still in our infancy in DAOs. DAOs are going to evolve a lot, in the coming years, but we really need solutions that, can adapt faster, if an algorithmic stablecoin, for example, were to lose its peg. Same goes for technical risks, right? There could be, smart contract risks and bugs like that. But the biggest risk or inefficiency that we see in the space is scalability, right? So there's lack of fungibility across brands and chains. So if we go to the next slide, please. it makes no sense that even though all of these stable coins are competing to be the same commodity, which is $1, they're all like different flavors or different colors. So if I have $1 and you have $1, they smell the same, they are all green. But with stable coins, it's not like that. They don't trade one-to-one. You usually need to go to a couple intermediaries. And so what that does is that, it's just inefficient, and we're not leveraging the aggregated liquidity that stablecoins can have, and the aggregated utility, by connecting every stablecoin is serving specific use cases, specific markets. And so it makes no sense that we're not working together as an industry to have a better chance of competing against CBDCs or large centralized stablecoin issuers. Next. So the original idea for Babelfish, it's an idea that was actually brewing towards the end of 2017. We had witnessed we were researching all of these risks, doing stablecoin industry-focused industry events, and the idea was to create, a market for risks around stablecoins that would enable the community to decide which stablecoins to aggregate, which not. And that was back in 2018. There were no lending markets. And so the idea was a bit early, but since then, we were seeing the risks that we were just discussing, and these risks have only become much bigger. So fast forward to 2021, we saw that Sovereign launched the project, and there was a lot of BTC liquidity, but they needed to bring stablecoins. Now that we have lending markets, we did a very simple proposal. We said, great, we can create an XUSD aggregator where we accept currently USDT, USDC, Binance USD, and DAI. But what we need is a DAO that can vote for potentially even lending this part of this collateral as a bank does, but then reinvesting the yield by converting it to our BTC, which is an advantage of being built on rootstock, and creating a social insurance pool in case there is some risk, and how to reward the governance that way. So we created this very simple proposal. I think that this design went really viral. People really liked it, and it really summarizes in a few words what we're trying to do. So the whole idea of Babelfish, it's really to lend the collateral, and then with the yield, use it to create a social insurance pool. And so for that to happen, if you go to the next slide, please, we need to launch a DAO, right? So the decentralized autonomous organization that we're seeking to build needs to create standards on how do we aggregate and distribute these different stablecoins. What are the standards for risk diversification that we want? How do we measure the percentage of each stablecoin that we should have in each basket, in each chain? How do we incentivize or disincentivize when we need more or less deposits in one stablecoin, in one chain? And so that's what the DAO will be in charge of before effectively beginning to lend out some of the collateral and beginning to integrate with other stablecoins, like, for example, UST. It's a great community that we're in conversations with, or True USD. But I'm happy to also report that we will be adding RDoc, which is a reef-backed dollar from rootstock, just to also facilitate RDoc users to take part in deeper stablecoin liquidity of these aggregated stablecoins. But also, if they wish, they can come to Babelfish, put in their RDoc, and then move to a different chain. So we have a lot of big dreams, a lot of big goals, a lot of things to be proposing and discussing in this DAO, which our vision is to make it like a stablecoin research and development DAO, where we can give a chance to also the long tail of stablecoins that have a very small chance of competing against large centralized issuers to come and join us and defend why we should add them into this basket. Next. So this is what Babelfish is. We're a relatively pseudonymous team, because it's not about a CEO or a CTO. We're really a distributed team from South America and from Europe and from the Middle East and from Africa. We have a lot of people working in this from behind the scenes, and it's completely open on Discord. And these are some of the values that you can see on our website. This is a graffiti that somebody from the community made. And next slide. We're really excited about the growth that we've been having. We launched first week of June, and we are already at about close to 13 million XUSD issued. That's backed one-to-one by other stablecoins. And this is just the beginning. Now today we had our fish token sale, and we basically sold 4.76% of the supply in 30 minutes. It ran out. And so we're really excited to be starting with the next phase, which is enabling stablecoin R&D and really taking XUSD to the next level and bringing a lot of stablecoin liquidity over to Rootstock and facilitate better Bitcoin trading, and ideally, integrate with many more partners like Tropicus and Defiant Wallet. Equality is also integrating with us, but then also, move XUSD and truly make it a multi-chain stablecoin translator. So that's it in brief where we are. Hope you check out our communities, participate in the DAO, and share your insights with us. Thank you.
Thank you so much, Leon. It's a wonderful and very interesting project. The problems that you mentioned that exist in the ecosystem are real, are there. The lack of liquidity, it's a major problem, especially for the most decentralized stablecoins. So I think Babelfish could play a key role in this ecosystem. Is the XUSD already listed on Sovereign, and can people lend it or put it there to generate passive income?
Yeah, so XUSD is already listed in Sovereign. We really want to thank the Sovereign community for trusting our project. Part of our huge and rapid growth has been because of Sovereign's adoption of XUSD to basically bridge over stablecoins, and we expect to be integrating, potentially next month with Tropicus and as well as Defiant Wallet.
Awesome, great. I also have a question. Many Bitcoiners are big fans of the dollar on chain, the stablecoin with collateral in Bitcoin. Are there plans to integrate that into Babelfish in the near future?
Yeah, so first we're going to start with RDoc, which we also believe is really, really important. And then after adding RDoc, we don't see a reason to also enable DOC to be part of the same basket. If people so choose to use it that way, they can also I know that in Sovereign, they can choose to keep on using it as DOC itself, unless instead of using it as XUSD, but the slippage may be a bit higher that way. And so, yeah, that's definitely our priority, is to list RDoc as well as RDoc, and integrate all across the RSK ecosystem. We've been getting a lot of feedback from the IOV Labs community as well. And that is also why we're right now, even though the protocol has been reviewed internally and externally, we're also right now, there's another audit ongoing with the support of IOV Labs, and that's it makes complete sense that that I think that's what RSK wants to do, which is to sustainably grow an ecosystem where everything is connected to each other, and that risk is reduced.
Yes, absolutely. Everything we do is done by Bitcoiners and for Bitcoiners, and we get this ethos of security and protecting users. So congratulations to the whole Babelfish team. It's an amazing project. I'm so happy to see that you've been very successful on the fish token. And I invite everyone in the space to get in touch with the Babelfish team, to participate in the Discord and get involved. Thank you so much, Leon, and send my regards and congratulations to the whole Babelfish community.
Absolutely. Thank you, Gabriel.
Thank you so much.